ChatGPT is going head-to-head with intelligent human fund managers in this investing battle, and it seems to be coming out tops. Take a look at this line charts. AI will be the greatest wealth creator in history because artificial intelligence does not care where you're born, whether you have money, whether you have a PhD. It will destroy barriers that have prevented people from moving up the ladder and pursuing their dreams of economic freedom. I didn't make that statement. This guy did. What does that even mean? Generative AI is helping us simplify our jobs or personal activities in so many ways. If you are a writer, you are probably using it to generate content ideas or articles. For me, a lot of my work entails research and analysis. I may want to have an overview about a subject I'm presented with before I begin to delve deeper, and that's where ChatGPT or its many variations like BARD, Bing, Perplexity AI may come in handy. The question is it possible to use these same conversational chatbots for investment purposes? Well, we're going to find out if there's any truth to Matt Higgins' statement with this investing battle between AI and humans. Before we get into the details, let's have some background about why this investing battle exists in the first place. On March 6, Finder.com launched this conceptual experiment. They wanted to see if ChatGPT would generate higher returns than established popular funds created by humans. They asked it to create a portfolio of 38 stocks on criteria taken from the 10 leading funds it will be competing against. The criteria for picking these stocks were as follows. They must be high-quality businesses. They must have low levels of debt. They must have sustained long-term growth. They must be assets that generate an advantage over their competitors. Well, ChatGPT responded by picking these stocks: Microsoft, Coca-Cola, Accenture, Thermo Fisher Scientific, Visa, Nestle, Cisco, Illumina, Home Depot, Amazon, Taiwan Semiconductors, Danaher Corporation, Alphabet, Meta, Intel Corporation, United Health Group, MasterCard, Netflix, Nvidia, Johnson Controls International, 3M Company, Adobe, Advanced Micro Devices, Cigna Corporation, Honeywell International, Salesforce, Applied Materials, Berkshire Hathaway, Lowe's Companies, Walmart, Lam Research Corporation, Elevance Health Inc., Procter & Gamble, United Technologies. The ChatGPT fund is being compared to a group of funds that were considered to have a wide reach and impact. So 10 of the most popular funds in the United Kingdom were selected from Interactive Investor. 1. Fundsmith. 2. Vanguard Life Strategy 100%. 3. Vanguard Life Strategy 60%. 4. Vanguard FTSE, Vanguard Life Strategy 80%. Vanguard US Equity Index, Vanguard FTSE, HSBC FTSE, Fidelity Index World. Well, according to Finder.com, the combination of these 10 funds was made to show the wider market performance. They are popular and trusted by a wide range of investors, which is why they are used as a reference point to evaluate the performance of the ChatGPT fund. So in case you are wondering what exactly a fund is, let me explain. A fund is a type of investment vehicle that pulls together money from multiple investors and uses it to invest in a diverse range of assets such as stocks, bonds, and other financial instruments. This diversification helps to spread risk and can provide more stable returns than investing in individual assets. Funds are typically managed by professional fund managers who make investment decisions on behalf of the investors in the fund. Now, let's go back to the chart and analyze the interesting points. If you look at this chart, you realize that on day 133 of tracking this portfolio, ChatGPT, which is the AI, has been able to generate 13.26% on top of the investment that was given to it, while the portfolio funds created by human fund managers has been able to do 3.82% collectively around the same time. Also, the highest ever profitability of the AI fund is 13.26% in comparison to the highest profitability of UK's 10 most popular funds, which is 3.82%. So you can see from this simple chart that the ChatGPT fund, which is also an AI fund, has outperformed the combination of the 10 most popular UK funds over the same period of time. Now, we have a winner, right? Well, not so fast. I want you to know that there are some limitations to this experiment, at least from my own analysis. So number one, here's what I noticed. For the purpose of this experiment, each stock was assigned equal weighting, which the other funds are not assigned to. For example, the S&P 500 is a weighted index made up of 500 largest publicly traded stocks listed on the US exchanges. The weighing system ensures that the largest and most valuable companies will carry the greatest weight in the index. So I want you to think of the ChatGPT fund as a pizza with equal slices. Meanwhile, the S&P fund is a pizza with unequal slices. That means the pizza is cut according to the size of the company. So if one company is worth $1 trillion and another company is worth $500 billion, of course, they cannot have the same size. So with an equal weight ETF, all the slices of the pizza are the same size regardless of the size of the company, which is the case of the AI fund or the ChatGPT fund. So I want us to make a comparison between the equal weight S&P 500 and the popular S&P 500 index. If you look at this chart, you realize that the equal weight S&P 500 index has always topped the popular S&P 500 index. Although both indexes are comprised of the same stocks, the different weighing schemes result in two indexes with different properties and different benefits for investors. As volatility tends to be higher on the S&P 500 equal weight index versus the popular S&P 500 index. So according to the official S&P Dow Jones Indices fact sheet data, as of June 30th, 2023, for the past 5 years, the annualized standard deviation on a total return basis was 20.76% for the S&P equal weight index versus 18.79% for the S&P 500 index. This shows that smaller cap stocks are generally more volatile than larger companies, and the S&P 500 equal weight index has a greater tilt towards small cap stocks than the S&P 500. So that's the first limitation. So the second limitation I noticed with this experiment is that the UK funds were averaged together. But here's how individual funds are actually doing from January to June 2023. Fund Smith 8.5%, Vanguard Life Strategy 4.73%, Vanguard Life Strategy 60%, 1.85%, Vanguard FTSE 7.3%, Vanguard Life Strategy 3.3%, Vanguard US Equity Index 9.21%, Vanguard FTSE 5.43%, HSBC FTSE 5.48%, Fidelity Index 0.2%, and Fidelity Index World 6.88%. Each of these funds were actually making bank on average. That means if you invested your money in any of these ETFs, you would still be profitable. So the third limitation is that these stocks were picked using GPT-3 language model, with its data training limited to 2021, hence without access to current happenings in the stock market. So basically, while ChatGPT seems to be winning this investing battle, the 10 funds created by the fund managers are still doing super duper very well. So with the knowledge of these limitations, who would you say is the winner of this investing battle? ChatGPT or the human fund managers? Let me know in the comments. For me, it's obvious that stock picks by fund managers are competitive with artificial intelligence picks like ChatGPT, even though this AI seems to be winning. Here's a little caveat before I say goodbye. Investing is risky. Do not use ChatGPT or its other variations to generate stocks to put in a real funded trading account. That is because these conversational chatbots were not designed for that purpose. Don't forget to like, don't forget to share. If you haven't subscribed, please do so. Until our next video, thank you for watching and catch you soon.